Stavros Tousios for M4Markets, and in today's daily analysis we are going to have a look at euro dollar and also pound against the Swiss franc. On euro dollar, we looked at a few days ago and we did actually say that we have met support over here, and that suggests that there is an acceleration to the uptrend that remains intact. However, since the last time, which I think we did see a pullback down to 76 or so, what has happened is that we are starting to see prices overlapping over here. And overlapping prices in that particular fashion suggest, because they do resemble a wedge, and wedge patterns in this particular stage of the trend, because we're not just at the beginning, right? They typically hint at reversals. Now that reversal doesn't necessarily mean we're going to go and crash all the way down there, but it could be a short-term reversal for a potential revisit of within back the channel. That would mean the trend will suggest that it's losing momentum, and then a potential move to the upside once again. But the main point here is that we do have a very big divergence here popping on the RSI, with prices of course moving up, and a very big resistance level at the 50 Fibonacci retracement of the full leg from, well, above 124, 125 if I recall correct. So down on the 1 hour, okay, it's very important that we pull a line, you know, and the idea is that we are probably looking at 1, 2, 3, 4, and 5. We should have 3 peaks and 2 troughs in wedges in this particular case. So of course it could be, for example, 1, 2, 3, 4, and we might not have seen the third peak so far, so we might be doing one leg to the upside, but with momentum being also here shown as a signal on the downside, that suggests that there is more chances that the wedge pattern is in rather than not. Now let's not forget, guys, that this will all depend on what's going to happen with the US GDP data today, okay? So that was the idea here. Now when it comes to GBPCHF, if we look at this leg from here to there, I mean, there is still a bit more upside to be done, right? And if we look the leg from here to here, it suggests like that we're closer to the top than we're to the bottom, so maybe another leg to the downside could be due as well. Now this sort of price action with lower highs and higher lows is typically sideways price action, and that particular sort of formation resembles a triangle to me, okay? So maybe, and triangles have 5 waves, maybe we're gonna go and peak at the 115 or so, and from there do another leg down to around 111, or perhaps 62% of that, because the triangles can be truncated in the last wave, around 112.56. Now in the shorter term, there is a tiny bit of divergence. It's still a divergence, but not so proper. However, what I do see is that there are overlaps in prices going up in between the swings. For example, here, and then you got this one here as well. That suggests that this move to the upside is indeed corrective. So we might be due another leg down. It's just that we have to pay attention to whether we get it very, very soon after a break of this low, because that's going to lead us down to around 112.50 already, and then perhaps even all the way down here, or whether we manage to get a bounce, a decent bounce, I would say, and then contrary break above this very, very short-term channel, and we'll go closer to 115, where probably we're going to get a better divergence